The Bitcoin blockchain and digital asset space. We're broadcasting live from the SALT conference in New York for the last day of the conference. I'm Christine Lee, your host on CoinDesk TV. All right, let's have a live look at Bitcoin right now. Taking a look at the CoinDesk Bitcoin price XBX index, currently trading at $46,410. Bitcoin is up about 4% over the past 24 hours, and the CoinDesk Ether price ETX index right now is at 3404. ETH is also slightly up, almost 2% for the day, and the new DFX CoinDesk's DeFi index is shooting up almost 9% over the past 24 hours, trading at $653-ish. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, so proof-of-stake smart contract platform Algorand is also up 555% year to date. Though today, it's one of the top losers on the CoinDesk 20. It's a major challenger to Ethereum and one of the top-performing cryptocurrencies, nevertheless, of the year. What's behind this meteoric rise of Algorand? Joining me now to discuss is Algorand CEO Sean Ford. Welcome to the show, Sean.
Thank you, Christine. Great to be here.
All right. So, but taking a look at the news of the day, everyone is looking at Solana. The network went down, and that seems to have an effect on other smart contract protocols like Algorand, like Polkadot, which are down today. Tell me, when you see that network failure, what comes to mind, and could that ever happen on Algorand?
So I think, first I would say that the technology that everyone is creating out there that we think is so revolutionary is tricky stuff. It's tricky technology. And yet, in order to continue to drive legitimacy with institutional investors, home offices, banks, et cetera, you really have to create code that you can trust, because it replaces a lot of the things that you're normally used to seeing, counterparty risk, other things that you see in the current financial system. So I think, it's never a great thing to see something, like that happen. But I think one of the things that Algorand has done from the very beginning is focused very heavily on building long-term enduring tech. We've doubled down on that from our inception, really driven by our founder, Sylvia McCallie, who's a Turing Award winner. And we've just stayed focused on, continuing to build and innovate high-performant technology. I don't think, and so far, we've been pretty lucky with how we've performed since June of 2019.
One of the arguments behind Solana was that it could handle a lot of throughput, a lot of transactions, and in the end, as we saw yesterday, there was a flaw. Is there any concern that there could be something similar happening on Algorand?
No, I don't think we have that type of a concern. We have a different architecture. The way we've constructed our protocol sort of processes transactions differently. And while you don't ever want to say that. Say anything that could jinx your project, I think, we've demonstrated again, given how we've architected our protocol, that we're not very concerned at all about having an interruption.
Right. Of course, Algorand was founded by Sylvia McCallie, who created the Algorand pure proof-of-stake algorithm. And so it was peer-reviewed by his colleagues and peers at MIT. It was shown to be scalable, and it's taken off from there, and it's taken a life on its own with your team. Perhaps you could go into how does it differentiate itself from the other smart contract protocols out there?
So I think a few things. One, from the very beginning, we're public and permissionless. And so we really wanted to create a protocol that made participation and inclusivity very simple. We designed the protocol from the beginning to really be able to handle many of the needs that you see or shortcomings that you see in the current financial infrastructure. So by building many of our capabilities into our layer one, we mitigated quite a lot of risk. The standard assets that we have, the smart contracts that we have, the ability to add features that financial institutions really have become, used to around things like account freezing, clawback, just minimizing the risk so that you can trust that when you execute a transaction on Algorand, it actually becomes final rather than gets lost in the ether somewhere. And so that, in addition to the fact that with us. And I think other protocols have different ways of approaching their core, sort of layer one design. Solana's proof of history. There's other forms of proof of stake. There's different approaches in terms of the capabilities that people have built into layer one versus layer two. And if you do more in layer two, sometimes that opens you up to risk. So I think we've really taken a focus on bulletproof, take it to the bank, no pun intended, technical performance. And I think that has proven to be one of the hallmarks of us since we launched.
So your aim is to build mostly on that layer one versus, we're seeing in other protocols like Ethereum, they're coming up with Ethereum 2.0 as well as Bitcoin. They're trying to perhaps maybe move things onto the Lightning Network.
Sure.
Do you think it's better on that layer one?
Well, we think the core capabilities in layer one make a lot of sense. Obviously, there's a lot of layer two apps that are being built on top of Algorand to take advantage of that layer one certainty. And so we, again, have seen that sort of bulletproof technical stability is something that certainly has been the type of bridge that traditional institutions, family offices, banks, national projects have really put through the ringer and come out the other side saying that this is a tech we can count on, and we trust the code that we see here with Algorand.
I want to go through some of the criticisms, and one of them is that it's not sufficiently decentralized, that the relay nodes receive disproportionate rewards, that the governance is currently a little too centralized, that there may be some community governments planned in the future that haven't been implemented yet, but perhaps you could address some of those concerns.
Yeah, I think look, we have thousands of nodes running globally around the world, every country except for Antarctica, so that is happening. We've rapidly decentralized.
But they're selected, right?
No, anyone can actually start a node. You can spin up a node in the background of your laptop, and it'll run for you. And in fact, it speaks to the sort of sustainability of Algorand, where if you look at Algorand's, the energy required to sort of run an Algorand node is minimal, and the amount of energy the network expends over the course of a year is the equivalent of about 10 U.S. homes versus some other networks that are entire countries' energy output. So I would say that from a decentralized perspective, I think we've made great progress. We have 15, 20 million, users out there, algo holders. We have people, over 700 projects building on the network at this point. A big developer community, thousands of people developing on the protocol. So we take that very seriously, and I think we're in a good place.
Right, you benefited from a lot of connections with MIT, other world-renowned universities, governments. One that I found really interesting was you have a relationship with Chivo, which is the government-run in El Salvador, the government-run digital wallet there. And how does that work? Because their Bitcoin law, obviously, they're introducing a rollout of Bitcoin as legal tender. So how does that work with the Algorand blockchain?
So Algorand was selected by Coinbanks, who was one of our partners that works with the El Salvador government, and we were selected as the government sort of blockchain for El Salvador. There are two things going on. One is the work that El Salvador has done and really pioneered around becoming a country that's trying to transform its economy by leveraging both blockchain and cryptocurrency. That being said, where we fit in was to work with them initially, like we do with a number of other governments, around starting to think about how they manage their government services, their processes, their documents, all of those types of things, while they sort of stand up what is sort of a nascent and really, pioneering way to think about economics within the country itself. So as far as we're working with El Salvador right now, it's really on helping to sort of round out that infrastructure, and knowing that, as you can imagine, governments and big banks and others want to make sure they do things right, and they take things at a pace that's maybe a little slower than you see in crypto space. A first step for us in our relationship with them is the sort of infrastructure for the government itself.
Mm-hmm. Interesting. And one last question I want to ask you about is the price of Algorand, because we've seen explosive growth in Solana over the past couple of weeks. We've also seen huge growth with Algorand, but there is a bit of a discrepancy. Solana is at one point over $200. Algorand is still, lower than that, shall we say, about $2 right now. Mm-hmm.
Well, I think you have to look at, so first of all, again, props to Solana for the work that they've done. I think that, we have a different focus. We really don't spend a lot of time thinking about price.
Is it something to do with the supply schedule, or I've heard comments that there's an inflationary effect on Algorand?
No, I think, Algorand is, we've got, 10 billion algos will only ever exist. The foundation in Singapore sort of manages that money supply. Much of it goes towards grants and developing the community. A $300 million algo fund was announced last Friday by the foundation to support DeFi and an expansion of DeFi there. But really, stepping back to your question, we don't really spend a lot of time thinking about the sort of position from a price perspective. We really, from the beginning, have said if you build a long-term enduring business that has real partners, real tech, that can truly become the infrastructure that people trust to handle their transactions, that all of the other things will take care of themselves. And if you look at our team, we have a lot of people. This isn't our first time building out startups and creating value. And we know that value is really very rarely created or destroyed overnight. So we've taken a very long-term view on what the ecosystem is going to bring and do for the people who participate and our partners that participate in that community.
All right. Well, if you build it, they will come. All right. As you mentioned, a $300 million DeFi innovation fund from the Algorand Foundation. They've also have partnerships with Skybridge and Nax. They've announced a partnership to grow decentralized applications on Algorand. All right, we've got to wrap it there, but Sean, appreciate the conversation and some insights into Algorand.
Thank you.
All right, that was Sean Ford, COO of Algorand. All right, coming up, checking out Asia and the crypto markets update with Verity Funds. Welcome back. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Justin Solomon of Forecast News.
Welcome to the daily forecast, September 15th, 2021. I'm Justin Solomon of Forecast News, covering all things blockchain, filling in for Editor-in-Chief Angie Lau. Just last week, we saw Solana hitting an all-time high, but things aren't looking so good now. The network has suffered intermittent stability issues, which have led to calls for a restart of the entire network. That story and a lot more coming up. Now let's get you up to speed from Asia to the world. First up, crypto industry darling Solana has had a dramatic change of fortune. The price of its native token has plunged more than 25% from last week's all-time high as technical troubles have plagued the network. Forecast News' Lachlan Keller has the details.
Solana announced it was experiencing intermittent instability on the network's mainnet beta overnight Tuesday Asia time. The company later confirmed the problem was due to a massive increase in the transaction load that peaked at over 400,000 transactions per second. That's well over the 65,000 transactions per second the network is capable of. The overload caused the network to start forking, resulting in some nodes going offline. Shortly after that happened, the validated community opted to restart the network, providing instructions on how to do so via Twitter and Discord. Solana tweeted that the mainnet beta restart was successfully completed after an upgrade to 1.6.25 by Wednesday afternoon Asia time, saying dApps, block explorers, and supporting systems would recover, restoring full functionality within a few hours. One expert told Forecast News glitches are to be expected across all blockchains early on in their development, saying Bitcoin experienced similar issues, so it's nothing new or strange.
What we should be looking at is kind of how does problem solving take place? To what extent do we see a dependency on centralization? Because that would be a kind of bad prospect for a long-term protocol that is really built around kind of open network ethics and decentralization.
Caseland said he's confident Solana will fix the problems, and the takeaway should be that instead of getting worried, it makes more sense to monitor how blockchain protocols handle such technical issues while maintaining trust in their communities. For Forecast News, I'm Lachlan Keller.
Meanwhile, one of Asia's most impoverished nations has ended a 3-year ban on crypto trading and mining. The government of Laos has selected 6 firms to take part in a pilot program that will also work in developing crypto laws for the country. Forecast News' Monica Ghosh has the details.
Just last month, the country's central bank reiterated the government's 2018 ban, reminding people that trading crypto was prohibited by law. But now, according to a government notice, the ban has ended with 6 firms allowed to begin a trial of both mining and trading cryptocurrencies, including Bitcoin, Ethereum, and Litecoin. Alongside that, a host of government ministries have been working with the central bank and other organizations on researching rules and regulations for the use of cryptocurrency, with their findings to be presented at the Prime Minister and Deputy Prime Minister's meeting this week. The government says it is trying to become the battery of Southeast Asia by building dams on the Mekong River to boost its hydropower generation to 24,000 megawatts, with the aim of exporting 80% of that power by 2030. That could enable the country to tap into the cryptocurrency mining industry following the exodus caused by China's ongoing crackdown. For Forecast News, I'm Monica Ghosh.
And finally today, the past couple of days have seen criticism over NFTs appearing in Chinese state-owned media, but things look to be back on track with the release of an official 2022 Asian Games NFT collection. Forecast News' Timmy Shen reports from Taipei, Taiwan.
The organizers say this is the first time in the history of the Asian Games that an NFT collection has been released, and it will give everyone the opportunity to become a torchbearer. How? Well, that's because the artwork features a 3D digital version of the torch for the games. The limited edition of 20,000 NFTs priced at 39 RMB, or around $6 goes on sale on Thursday via Alipay's in-app NFT sales feature. The 19th edition of the Games, an event which is held every 4 years, is set to begin in just under 1 year's time, with athletes from all around the region competing in more than 20 sports. For Forecast News, I'm Timmy Shan, Taipei, Taiwan.
Goes to show everything's still in play for the NFT world. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Justin Solomon. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, and joining us now to discuss the crypto markets is Wes Fulford, CEO and Portfolio Manager at Verde Funds. Welcome to the show. All right, so we're taking a look at Bitcoin. We're seeing Bitcoin, Ethereum pop up. A lot of the alts are also, nevertheless, some of the losers today are Algorand and Polkadot after yesterday's network failure on Solana. Taking a look at Bitcoin first, what is your short-term outlook on what the markets are doing?
In terms of a price forecast or just in general?
Both.
Yeah, I mean, it's hard to say. I mean, there's a lot of people that try and use technical analysis and using the past to predict the future, but I think, we're only one big tweet away from the next bull run in BTC, trading here at around 47.5 this morning. I think there's a couple things that have buoyed the market this week over the last couple sessions. One, probably Cathie Wood's comments and forecast at the SALT conference where we're sitting today in terms of a 10x over the next 5 years and $500,000 long-term BTC, and then another Michael Saylor announcement, $243 million purchase for another 5,050 BTC on the balance sheet of MicroStrategy. So.
And are you in the bullish camp of seeing that exponential growth by the end of the year or in the next couple of years?
Yeah, there's definitely lots of models out there which you could use to sort of forecast price adoption long term. And I mean, the go-to seems to be the Plan B sort of stock to flow model. And I think levels there would suggest that, in a year's time, we're somewhere around 110,000 per coin. And I sit in that camp. What's going to happen in the next 3 months, 6 months, 12 months? Who knows? But I think long term, 5 years out.
Right now we're seeing Bitcoin over the 200-day moving average. It's also getting close to the 180 moving day average, so a bit of resistance there. Taking a look at some of the Ethereum alternatives, they are taking a hit. I wondered, you're an ETF guy. Do you see a correlation developing among these Ethereum alternatives?
Yeah, I think looking at some of the leading, like Cardano or Sol, or I think there's a need for other protocols like that, and a lot of them are being spurred right now by the boom in NFTs, and a lot of them are have better components in terms of tech, proof of stake, proof of history. There's a need for scalability and a real use case for some of these. I personally a little bit of a Bitcoin maximalist. Always have been.
I see what I'm
and I've been through lots of market cycles like this, and I think when you have issues with altcoins like Sol has experienced yesterday, it only sort of fosters adoption for some of the market leaders. You see some strength in BTC and people moving out of the riskier classes and rediversifying into the market leaders.
So do you see folks moving back to the majors after a bit of volatility in the alts?
I do, yeah. I mean, at the end of the day, right now, people are just clamoring to participate in the ongoing boom and looking at long-term portfolio strategies in terms of hedging against inflation and stimulus printing tied to COVID and pandemics globally. So, yeah.
Well, you mentioned this. You're an ETF guy with the U.S. Clean Energy Crypto Mining ETF, RIGS. Tell me a bit about what kind of volumes you've been seeing since the launch of RIGS.
Yeah, so we launched RIGS on the NYC about 7 or 8 weeks ago. Was our trading debut. Yeah, it's an actively managed fund focused on investing in the infrastructure that underpins the protocol. Bitcoin and Ethereum primarily as the publicly traded miners being their coins of choice. Funds up about 49% in the first 8 weeks, or in terms of share price, and adoption has been strong. I think all kinds of reasons why you want to buy a miner in terms of leverage torque to the underlying commodity, the growing digital asset inventories on the balance sheets of these miners, and the ability to produce BTC significantly below spot. If you're running new-gen hardware at industrial scale pricing, you're producing BTC at 90% more discounts to where it's trading right now.
And actively managed. So with the regulatory environment right now, how are you allocating the companies in your ETF? What's the thesis behind that?
So we only hold globally publicly traded cryptocurrency miners and semiconductor companies. All of these are public equities. They've passed the sniff tests, the regulatory requirements of the SEC and other leading regulators globally. And unlike the Bitcoin or digital asset ETFs that are still sitting in limbo waiting for approval or a final decision from the SEC, we're investing in equities. They've already gone through this process. So, I reside in Toronto personally. We're a little bit further ahead in terms of nascent in terms of nascent marketplaces. There's there are publicly listed Ether and Bitcoin ETFs on the Toronto Stock Exchange. So
right, and Canada has been much more receptive to ETFs in the market. Do you see the potential for the U.S. warming up to a Bitcoin ETF or an Ethereum ETF in the future? What is the regulatory environment in your opinion?
I do. I mean, the recent announcement with VanEck's ETF filing is interesting because I think the way the framework works here in the U.S. is the SEC is allowed to delay a decision up to 3 times. So November will be the finality, the deadline for approval of or disapproval of that potential listing for the VanEck product. I think it's a matter of time. I mean, and if the U.S. doesn't move, other global markets will continue to move. And
that's very optimistic. But when do you think that will happen then?
Well, it already happened in Canada. I mean, February we saw the purpose and evolve ETFs, and there's a really big advantage to being a first mover
When do you
here.
think it'll happen in the U.S.?
If I were a betting man, and I would say Q1, late Q1, Q2 next year.
That's very optimistic. Wes, great to have you on the show. Great analysis of the markets, and good luck on your RIGS ETF, everyone. Right, that was Wes Bulvard, CEO of Verity Funds. Coming up, CoinDesk regulation and policy update with Nick Day. And we'll have our spotlight guest, LMAX CEO David Mercer. Welcome back. Time now to check in with Global Policy and Regulation Managing Editor Nick Day, who is also the editor of the State of Crypto newsletter on CoinDesk.com. Welcome to the show, Nick. Good morning. Tell me what you're looking at.
It's been a busy week so far. Yesterday, SEC Chair Gary Gensler testified in front of the Senate Banking Committee, and for the first time, he was very explicit in saying he believes exchanges like Coinbase should register because, in his view, there are securities listed on the exchange. He's kind of, implied this. He said, in his view, many crypto exchanges and trading platforms have securities listed, but he never explicitly named one before. And of course, the bigger picture here is Coinbase last week publicly announced that it's engaging with the SEC and received a Wells notice about one of their products. So, it kind of feels it's interesting timing. I'm not saying, for sure that Gensler named Coinbase specifically because of that, but interesting timing. This was in response to Senator Elizabeth Warren, but, I think the broader takeaway is just Gensler feels like, crypto companies should be doing very specific things.
Is there any understanding of what Coinbase the response will be? Just taking a look at Twitter, some folks are saying they should just go ahead and launch their product anyway and potentially litigate that in the courts. Is that the way we want things to happen?
I saw the exact same argument when the SEC sued Ripple. The expectation is, at the end of the case, assuming that it gets all the way through a trial and everything, there will be some kind of judicial precedent saying, this is what a security might look like. The problem for the companies is, it's expensive, it's a lot of money, it's a lot of time and resources. And, even for those who are hoping that there's some kind of a quick, real response, cases take a long time. We're following court cases that started years ago right now, and they're no closer to conclusion now than they were in 2018. So, it might make sense from some point of view, but it won't be fast. It won't be easy to follow along. We're still going to be waiting here, hoping for whatever regulatory clarity the industry wants in a year, 2 years, 3 years, even if a lawsuit is filed.
Well, certainly a recurring refrain I'm hearing at this conference from various entrepreneurs and protocol developers is that, they want to work with regulators, they want some clarity, they want open dialogues, and they're very receptive to having guidance. So definitely interesting to see where that heads. Nick, we got to wrap it there, but thank you for joining us, and thank you for monitoring what's happening in D.C. for us.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So LMAX Group is a London-based fintech company that operates multiple exchange trading platforms, including LMAX Digital, their crypto exchange. Earlier, I had the chance to speak to LMAX Group CEO David Mercer about his latest $300 million raise at a $1 billion valuation. His thoughts on Solana amid the network failure and competitor Binance being ousted from the UK by regulators there. We kick things off by talking about his crypto markets outlook. Have a listen.
So hopefully we're squarely in crypto already. We launched LMAX Digital in 2018. It was the fifth of our exchanges. The other four are foreign exchanges based in London, New York, and Tokyo. So basically the thesis was actually created for us by our biggest FX trading participants. So they were trading crypto on many other venues, and they came to me in 2017, knocked on my door and said, David, we need some institutional grade architecture. What does that mean? We need efficient price discovery. We need technology that doesn't go down. We need low latency. And we need depth of an order book that means we can exchange risk with like-minded participants. So that was really the starting thesis to build the institutional trading venue. I'm pleased to say in LMAX Digital today, we do ADV, average daily volume, in case you never heard that terminology before, of $2.5 billion a day. As a group, we trade $30 billion a day. So,
looking at the crypto markets, what made you interested in diving into digital assets and the trajectory it has in terms of growth in this sector?
I guess my answer was a little bit too lengthy, right? But I think, look, crypto has the potential to revolutionize the whole of capital markets. It does that mainly through payment channels. So the problems in traditional capital markets are payment, settlement, and reconciliation. The blockchain technology can improve that, as indeed will DeFi, right? So within my FX world, believe it or not, it takes T+2, so 2 days to settle fiat currency. Whereas obviously with Bitcoin, Litecoin, Ethereum, XRP, you can settle instantaneously. So that's going to be the difference in capital markets. And for us, listing BTC USD was just a natural extension for us from listing EUR USD, or Euro as everyone else calls it.
And you're putting Bitcoin on the balance sheet,
sure.
Correct?
But I mean, I don't buy and hold. I happen to hold some Bitcoin, but we also hold balances in 15 different currencies. So Bitcoin is just a 16th, and Ethereum is a 17th. But I'm not a long-only investor. You know, we don't sit naturally long of Bitcoin. We just match buyers and sellers. That's what LMAX Exchange and LMAX Digital does.
Tell me a bit about your foray into DeFi, and are you also interested in the NFT space?
NFTs, I must confess, I don't know that much about. I bought my first one, which happens to be a picture of myself yesterday. So CryptoPunk, that's exactly it. Look at my Twitter profile, Mercer David. But yeah, so I don't know much about that space. For me, that's not an institutional product, but it's certainly interesting. You know, I'm interested in art. DeFi, I think, has the potential, again, to transition the whole of borrowing and lending in capital markets. People talk about these buzzwords like yield farming. That parlance has been around for years as stock borrowing and lending, or repos in traditional capital markets. I think the real key there is the ease of utilization of your balance sheet. Whether it be you, Christine, whether it be the largest institution in the world, posting your balance sheet, what do I mean? Posting your assets on a blockchain, putting them to work, lending them out to someone else, earning a yield on that intraday, so even every 8 hours rather than waiting till the end of the week or the end of the month, could be immensely powerful for every institution and every individual in the world. So we're big fans of DeFi. The only way a centralized exchange can contribute to that is by contributing to an oracle, which is the way you're going to value the smart contracts in DeFi. And we're very pleased to be one of the founders of the Pith network built on Solana. And we contribute our FX pairs and our crypto pairs to the Pith network today.
Speaking of which, Solana experienced some network failure. Did that have any impact on your product, on Pith?
Has an impact today. It doesn't have an impact, I don't think, in anything long term. I mean, all of these things are computer science experiments. You have to expect some tech issues from time to time. Today's a big issue. One of those particular days, it's not particularly big, I don't think. It happens that it's at a SALT conference, but it's natural, and I don't think it will affect the trajectory of Solana and Pyth Network at all in the long term.
Okay. I think you linked it to a web page that went down for you. It doesn't impact things in the long run, but
look, if you look at all the retail platforms out there, they get a hard time at certain times when their platforms go down. Nothing worse than trying to trade and not being able to trade. In the institutional space, you cannot do that. So we haven't had a down second in 7 years. I have a status page and no one believes me. So of all my exchanges, that shows our uptime. But look, it's technology. Things go wrong, especially these new experiments such as Solana, such as Pyth. There's going to be teething problems, as there were with Bitcoin back in the day, as there are on these retail platforms out there. But you should expect it.
Some would argue it's not sufficiently decentralized, and that's part of the problem.
Which bit isn't?
Solana.
Is anything as truly decentralized as we talked about, for example, in the first white papers? I don't know if that's the case. Is anything really decentralized? Decentralized means that you don't need an LMAX or you don't need an exchange.
Bitcoin is really decentralized because anyone can open a node and it's very well distributed
really,
in comparison.
It's also supposed to be anonymous. It's also supposed to be trustless. Look, the biggest venues in the street, the biggest traders today aren't anonymous, and the holders of that asset aren't anonymous. So, people can argue all they like. And by the way, I believe in the premise of all of this, right? But, and I've been saying this out there on the panels, we have to be pragmatic. You have to have a pragmatic approach to get to nirvana. You can't go from the world of fiat plumbing payment rails today. 99.9% of the world today is still fiat. You can't go from that to decentralized and anonymous instantaneously. You just cannot. So we need to be pragmatic, all of us, with these computer science experiments.
So you recently had a $300 million raise, putting LMAX Group at a $1 billion valuation. Tell me a bit about what you're going to do with that money. Where's the trajectory for LMAX Group?
Well, look, we were very pleased to announce that in July this year. Basically, JC Flowers were the investor. I'm very pleased to have them on board. Their humility, their courtesy, their experience and expertise is unparalleled. Their connectivity should allow us to accelerate our growth in both fiat and crypto. It was completely a secondary sale, so no debt added to the balance sheet, so it's just to accelerate our growth. And our goal is to be the #1 FX exchange and the #1 crypto exchange in the institutional space within 3 to 5 years.
And so when you're at the SALT conference, you're talking to hedge funds, you're talking to various accredited investors, PE funds and such. What kind of conversations are you having with them in terms of, are they interested in cryptocurrencies? Are they interested in that part of the business?
Oh, sure. I mean, they're all interested in crypto. Everyone has to be interested in crypto. We all need some of it in our portfolio, whether it's you as an individual, whether it's you as a pension fund or an asset manager, or even a private equity fund. I said to you earlier, there's $110 trillion of assets under management today in the world, asset managers, wealth managers. If you put 5% of that at work, right, you're going to have a valuation of crypto at around 5 trillion. Today it's worth 1.5 trillion. So that tells you where it's going. So everyone has to be interested. The biggest blocker for all of them right now is credit, right? And again, I'm going back to the pragmatic approach to this new asset class. Everyone, all of those players you mentioned, want to go through traditional plumbing, networks, and connectivity, right? They want that credit intermediation. And normally that credit intermediation, certainly for funds, is via banks. So that's the blockage for institutional money right now. We need, as an ecosystem, the banks to come. I believe they are coming. I know 10 of them today take market data from LMAX Digital. But that's the blocker, and certainly everyone is trying to work around that issue right now.
And just one last one. I wonder if another blocker happens to be risk. And we see that with a crypto exchange such as Binance, which is having trouble in the UK. They're being told they're not authorized to operate there. Is that boosting your business in a way? And I say that looking at Binance, which has made a name for itself breaking down walls. First to create its own cryptocurrency on their own token on their exchange. They're into NFTs. They're building innovative products, but at a price of perhaps building without asking for permission. And I wonder what your exchange has done to differentiate itself, and has it benefited from this Binance?
We want everyone in the crypto ecosystem to thrive. There's different approaches out there, and certainly the retail platforms have taken a different approach. Personally, we work, LMAX Group and LMAX Digital is very heavily regulated, right? And we operate just in the institutional space. So we believe regulation is a good thing. We like to understand the framework and work within that. We believe that's the way that crypto can grow and will grow. Now, there's some teething problems right now in the US, for example. Is it a security? Is it not a security? Right? Is it a loan or is it not a loan? Right? But let's sort out what the products are. Let's sort out, are they financial instruments? If they are, then which bucket do you fall under? Which regulatory regime? Is it the securities regime? Is it the banking regime? In the UK, I'm regulated as a MTF, multilateral trading facility, and as a broker.
So are you benefiting from the fall of Binance?
I'm not here to talk about any competitors, and I couldn't even talk to any potential fall. What I would say is, if you operate in a jurisdiction, you've got to make sure you have the appropriate regulation. We do, and sometimes we can't operate in jurisdictions because you don't have the appropriate regulation. But everyone's going to work through it. I think it's very early on. It's very new for a lot of these players, and genuinely, I want everyone in crypto to thrive because we need the ecosystem to grow.
All right, that was LMAX Group CEO David Mercer. Time now to check in with crypto Twitter with our tweet of the day. This one coming in from Mike and Dennis, a well-known investor with a quick wit in the crypto space, tweeting Solana down 14% after not working for half a day. Cardano valued at $76 billion after not working ever. It's been quite amusing this morning, trolling through the smart contract protocol comments on Twitter this morning, and seeing those Ethereum killer comments. All right, that's it for First Mover. I'm your host, Christine Lee, live from the SALT conference in New York. I'll be here live at 3 p.m. for All About Bitcoin with more interviews from the Javits Center. Coming up at noon is The Hash. You're watching CoinDesk TV.